I want to move on to our chart of the day because we want to highlight what's been going on in the VIX market. Again, this is the fear index. They call it the volatility measure, if you will. And it's been a noticeable round trip to around 19 handle today, but it's noticeable that we've gotten below 20. Essentially, again, what this measures is kind of investor perceptions over what the medium-term risks are to the overall market. Now, zooming out, we've noticed the water's getting less choppy over the course of March. Everyone was jittery at the beginning of the month when this index was almost double where it is now. And I'm no technical analyst here, but when you take a look at the year-to-date picture on the VIX, it's interesting to note that the peak that we had seen, which was nearly double where we're at now, kind of at around 36 handle, really tracks the escalation in the Russia-Ukraine war. So kind of draw a line up from late February through March. You can see that really it coincided to the beginning of March, the really big depths of Russia's invasion into Ukraine. So for those wondering if it's the Fed rate hikes that are kind of the source of uncertainty, remember that the Fed meeting was actually after that peak. It was around March 16th here. And it's not like Fed funds futures have gotten more certain about what the Fed's going to do over this period. So Akiko, when you take a look at the fear index, it suggests to me that maybe it's really the Russia-Ukraine situation that has been the bigger story for markets, not necessarily the macro picture from the world's largest central bank. Very interesting, especially with the price movements specifically today.
Yeah, I mean, you could argue, Brian, that in some ways investors kind of just wanted to get that first rate hike out of the way. You're right. We don't know exactly how aggressive things will go going into the second half of the year or the remainder of the year. But there's still that one that got out of the way. And yes, there's still uncertainty, but at least you've alleviated one thing. And, you know, Russia, Ukraine, I mean, this is an interesting move to me, even looking at how the marketers responded today, because as I see it, the uncertainty is still there. There's no clear path right now to the end of this. And the good thing that we mentioned earlier, our two sides are talking. It feels like there's some progress. And yet you have to think about what the end game is for Russia. The questions around how Russia's likely to escalate things, still not answered. And then in the meantime, you've got these sanctions really weighing in on the Russian economy, but also on Europe in a significant way. So, interesting to see that how you show that, I mean, how the VIX chart looks. But I mean, I would argue that that uncertainty, the risk on Russia, Ukraine, it hasn't really shifted.
No, certainly not at all. And what is interesting is that there's been a lot of attention to the VVIX, which is a derivative of the VIX itself. I'm not going to get into it right now, but there's a lot of suggestion that the way that those options are kind of structured, there's been a lot of price movements that are a bit detached from the actual news stories themselves. It just kind of has to do with how traders themselves are structuring the derivatives contracts. So we need to kind of take the VIX and also any sort of derivative products to that with a little bit of a grain of salt, but worth leaving that there, at least for that discussion. Coming up on the other side of the break, though, we will switch gears and talk about space. We'll speak with the CEO taking on companies like SpaceX and Blue Origin by offering customers a luxurious trip to the cosmos in a balloon for $125,000. You heard that right, a big balloon.